Welcome back, everyone. Today we're going deep on Goldman Sachs. Is it a buy? Is it a hold? We want to find out. And we've got a ton of info to help us decide. Got stuff from Wikipedia, some financial performance summaries, and a bunch of analyst reports.
Yeah, Goldman Sachs is, well, you could say they've had a pretty interesting history. I mean, founded all the way back in 1869. That's over 150 years in the financial world. Started with trading, moved into investment banking, and finally, in 99, they went public.
It's a long time to not only survive, but actually thrive, you know? But, I guess it also means they've been involved in some pretty major financial events, both good and bad.
Right, for sure. I mean, you think about their role in the 2008 crisis. They got TARP funds, they repaid them, but they also still managed to set aside these huge bonuses for employees.
It's kind of crazy. Like those 2009 bonuses, I read they were a record $11.4 billion.
Yeah.
That says a lot about their compensation culture. And I think it might be something to keep in mind when we're looking at their overall financial performance.
Definitely. It's a point worth noting for sure.
Okay, so let's actually look at the numbers now. So Goldman Sachs, they're considered part of the bulge bracket, right? Which is basically it's the elite group of investment banks. And they consistently bring in big revenue, especially from investment banking.
Yeah. And being in that bulge bracket means they've got, the size and the influence to compete for these massive complex deals. But we need to think about if their market share is it solid? Is it stable? Or are they actually facing a lot more competition than before?
Good point. And to stay competitive, it looks like they've been making some pretty interesting acquisitions lately. Like, for instance, they bought GE Capital Bank's online platform for deposits, and then also GreenSky, a fintech company. They specialize in buy now, pay later stuff. I feel like these moves say something about where they're headed, maybe more towards digital services and consumer-facing stuff.
Yeah, absolutely. It could definitely be a sign that their strategy is shifting. They might be trying to diversify, or maybe they're going after these new and potentially really lucrative markets. I think it's important to, dig a little deeper into how these acquisitions are doing if they're really helping Goldman Sachs grow.
Yeah, sure. And, we can't forget Goldman Sachs isn't just an investment bank anymore, right? They've got their fingers in other pies. They've got asset management, they do private wealth management, and a bunch of other services too.
Right. It's not just investment banking. We definitely need to look at how those other business lines are performing. Are they growing? Are they profitable? And are they really diversifying the revenue stream? That's what's going to make them less dependent on any one specific market.
Talking about diversification, their innovation pipeline is, well, it's pretty interesting. It's like a mix of classic finance and then these jumps into newer areas. For example, they're doing Ethereum derivatives now. Financial contracts tied to the value of Ethereum, the cryptocurrency.
Yeah, that's a big one. Getting into those crypto derivatives definitely suggests they're, well, I guess testing the waters in some pretty new areas of finance. But we've got to figure out, are these moves carefully planned or are they, just chasing the latest hot trend? That's what's going to tell us about their potential for future growth.
It's all happening in a pretty complex global landscape, too. I mean, Goldman Sachs has offices and operations all over the world. That's got to come with some both risks and opportunities, I'd imagine.
Yeah, I mean, having that global reach lets them get into these emerging markets, but on the other hand, it leaves them open to economic problems and even, geopolitical stuff happening in all these different regions. So you've really got to think about how much exposure to the global scene fits with your individual risk tolerance.
All right, let's move on to valuation. So Y charts. It shows that Goldman Sachs has been buying back their own stock recently, though we don't actually have the exact numbers.
Share buybacks, they can actually be a good sign. It often means that a company thinks its stock is undervalued and they're trying to bump up the share price.
Okay, that makes sense. But this is important. It seems like we're missing some key information about their dividend policy. The sources we have, they don't really give us the details there.
Yeah, that's a big one, especially for investors who are looking for income. You definitely want to do some research on their dividend history, look at the current yield, the payout ratio, see how it compares to other companies in the same space, and of course, understand what could affect those future payouts.
Now let's talk about something that's been coming up more and more. ESG, environmental, social, and governance factors. And, well, to be honest, Goldman Sachs has had its share of criticism in this area? I mean, there was that hunger bonds thing in Venezuela, and then there's that gender bias lawsuit that's still going on.
Yeah, you're right. ESG is becoming a bigger and bigger deal for a lot of investors, especially the ones who want their investments to, match their values. And those controversies you mentioned, they definitely raise some questions about how committed Goldman Sachs really is to ethical practices and, long-term sustainability. So investors really have to think about, is the company actually dealing with these problems, or are they just trying to, like, protect their image?
Okay, so taking everything into account, I guess the big question is, what are the pros and cons of owning Goldman Sachs stock?
Well, on the positive side, they've got this long history of, making money. They've got a really strong market share, and they're definitely making moves to grow, like with those acquisitions and the innovation stuff we talked about. Plus, the share buybacks, those could be a sign that they really believe in their future.
That's true. But, they're exposed to a lot of global risk, like we said, and we still need more info on their dividend policy, especially if you're an investor who's looking for steady income. And, of course, there are those ESG concerns, which, raise questions about their commitment to doing things the right way.
Exactly. So at the end of the day, whether Goldman Sachs is a good fit for you, it really depends on, like, what you're trying to achieve with your investments and how much risk you're comfortable with. You have to weigh it all out and decide if the positives are stronger than the potential negatives.
It makes you think, right?
Yeah.
I mean, Goldman Sachs has been through so much. They've survived all kinds of financial craziness. But are they really changing with times? Or is this just, the same old stuff happening again?
That's a good question to think about. And remember, investing is all about, like, careful research and really thinking things through. This deep dive, hopefully it's given you a good foundation for understanding Goldman Sachs. But you got to do your own homework. Think about your goals, your risk tolerance, and how long you plan to invest. Only then can you decide if Goldman Sachs is the golden opportunity you're looking for.
And hey, if you want more deep dives like this on other companies you're interested in, make sure you subscribe to our YouTube channel. We love hearing from you, so leave a comment down below telling us what stocks you want us to cover in future episodes.
Yeah, we love those suggestions. And until next time, happy investing.
Something else that caught my eye was their acquisition of Clarity Money. It's a money management app. We don't have a ton of details on, what the app does specifically, but I think it's interesting that they're going after, like, maybe a broader audience, maybe even those younger, more tech-savvy investors.
Yeah, for sure. That move with Clarity Money, it seems to fit right in with that whole push into the buy now, pay later market, through Green Sky. It's like they're, I don't know, waking up to the fact that the financial world is changing and they're trying to stay ahead of the curve. I think the real test will be to see, like, how these new ventures actually perform and how well they can, blend them into their existing operations.
And then there's this, I know it sounds weird to focus on this, but they launched their own font back in 2020, like a proprietary typeface. It seems kind of random, but I think it says something about how much they care about their brand and, those little details.
It's true. You wouldn't think a font would matter that much, but it does. It's part of shaping how people see them, their brand identity, especially in a field like finance where everyone's, competing for attention.
All right, so wrapping this all up, Goldman Sachs, it's a bit of a mixed bag, right? I mean, they've got the history, they've got the global reach, and they're clearly making moves to, adapt to the changing times. But there's that history to consider, the way they handle compensation, and then those ESG concerns we talked about. It's all stuff that, potential investors need to weigh carefully.
Absolutely. We've given you a lot to think about today, a framework for, really evaluating Goldman Sachs. Now it's your turn. Go do your own research, think about your goals, and then you can decide, is Goldman Sachs the right fit for you? Is it really a golden opportunity?
That's the big question. And hey, if you're hungry for more deep dives like this on other companies you're curious about, hit that subscribe button on our YouTube channel. And definitely let us know down in the comments, what stocks you want us to cover next. We love hearing from you.
Absolutely. We love those suggestions. Until next time, happy investing.